Righty-ho, guys. Hopefully this is streaming live. Now, I'm just going to check it and give you guys some time to get on the show here. So let me just jump on my phone and make sure that is working on YouTube. Because last time I did it, it didn't come through with any audio, and this time I want to make sure it does because I spent about 35 minutes doing it. It was before Christmas and it was an absolute disaster. So yeah, live and learn with some of these new things. You sometimes don't get them right first time, but anyway, let's just have a look at my channel and see if I've got anything on there. Okay, my channel. Come on, let's see what pops up. And I'll have a look at the... oh, that's not the wrong place. Come on, right, let's just see if we can see any live video feed here. Here we go. Seems to be live. If I just hit play, I just want to see if I can hear myself. Yes, it's working. So, 2 people are watching now. Brilliant. So, my little second screen is my iPhone. Right. Okay. So today, this is the first of, or my second attempt of doing this YouTube live thing, right? And so what I want to do is I want to run through a couple of the experimental EAs that I've been working on in the background, and just want to let you guys know what. Give you guys a chance to get hold of them, and I'm going to walk you through what you need to do. In actual fact, if you have a look under the video, it should explain what you need to do to get hold of this. It's pretty simple. It's a simple concept. All you need to do is you need to like the video, and when the video gets to, this particular video gets to 100 likes, then I'm going to give the people that have liked the video and filled in the form, there is a link below the video, or there should be anyway, to fill in a form. So if you fill in the form, paste the video URL in, so I know which video you're talking about, I will send you the EA when we get to 100 likes. So if you are the 100th person to like this, then please do also send me an email so I know that limit has been reached and I can start distributing this EA. So the EA that I'm talking about today was one that I had in mind a few weeks ago, and obviously this didn't work in the end, so I had to sack it all and start again. So this time, hopefully, it'll be a little bit better. And what I'm going to walk through is the EA that I built, and if I can get a chart up here, it might actually help. This is an EA I built last year, and it seemed to work really well, even though the actual strategy is a little skew-whiff, a little weird. And right, if we can zoom out a bit, that might help. So the way it works is it looks for a moving average stack, and then it only takes sell trades, okay? Only takes sell trades. And what it does is when the, what have we got? The 200 moving average here. We've got the 50, we've got the 21, and then we've got the 13. So when these are all stacked in this order, and we have a bullish engulfing pattern, we look to do a sell trade. Okay, so in this case, the price has gone down, and we've had a small bullish engulfing pattern here, and we've entered the sell trade because we've got that stack active. Okay, so that's how it works, and you can see here we did it again because the price. I think the price needs to be below. Oh no, that was another bullish engulfing pattern. So we've looked to take these, and then what it does is it looks to exit these trades not at a set. Or actually, you can set it to a set take profit target. So in this case, if I have a look here, so the take profit target here was 50, but it also closes all profitable trades at the end of the day, which does give it a little bit more room to move, and it means that you could get a nice, you could take some money off the table without it going back down into a potential drawdown. So the resultant strategy running through on this currency pair, so I'll see if I can find some other examples. So here's some good winners. So fairly quickly, we're in a downtrend, we're below the 200, we get a bullish engulfing, then price comes straight back down into profit. And do these close at the end of the day? Let's say, oh, that's the start of the day there. So what have we got here? Yeah, that's our 50 pips take profit. 50 pips, 50 pips. Okay. And this one here closes at the end of the day. So you can see that, if we just have a look here, you can see that one closes at the end of the day. So right there, the last second of the day, we closed that trade. And at that, in actual fact, if we'd let it go, it would have probably made us 50 pips anyway, but that would have made a small profit of 3 pips. But it still took the money off the table. And we had a nice 50 pip win here. Okay, so you can see how this strategy works. It's a bit of a weird one. There's no buy trades in it, only sell, and only when it's under the 200 moving average. And we do it on a bullish engulfing pattern, which is a bit contradictory to what a bullish engulfing pattern does tell us. It tells us the price goes up, but you can clearly see here that the price is going down. Although this one would have gotten to a bit of drawdown here. So there is drawdown with this strategy. So I'm going to walk you through a few variations of it that I put together. So this is a look at how the strategy played out on the, what do we got here? The GU, so Great British Pound US dollar cable pair, and the 2016. So 1st of 2016 to the 1st of 2017, and you can see here that it moved up and then went into a bit of drawdown here, but the good news is we didn't actually sort of go too far down. I mean, although it looks pretty dramatic here, what we're talking about, we're talking about 2,000, so $1,200 at its max drawdown, and that was on a $1,000 account trading, what are we trading here? Yeah, 0.01, okay, so the micro lots. So you can see here that was probably the worst that it suffered. And I suppose if we look at the date range here, you might think that, actually we might find that some of these trades were triggered on black swan events because there were a few during the year. Okay, so you can see here at the end it all tapers off because it's closed everything out at the end of the strategy test. But you can start to see it creeping back up to suck up that drawdown again and get you to the point where it kisses the equity curve. And this is what I sort of like about this strategy, is once you can get to a point. So for example, if we get to this point here, what's the balance here? So you got a balance of 2,653 and your equity is the same as well. So pretty much you can take $1,600 off the table, or you could take $1,000 off the table and be left with 600 more than you started with when you were trading this. So if that was the plan of attack for this type of EA, and I think it has to be really, because it is high risk, there is no stop loss, and trades will go against you unless you keep adding money to the account. So if you do want to trade this, you are going to want to look to take money off the table. And at the $2,000 mark, you can take your entire at-risk portion off. And in this case, you would have had to wait to the $2,500 mark before you could actually do that. Or you could have done it here, I suppose. You could have done it with a bit of drawdown, but things had come back. And at that point there, you had $2,016 that you could have taken off the table. Or you could have taken $1,000 off the table and been left with your starting balance again. And how would that have fared? Well, we had here a difference of 400, so you would have gone 400 into drawdown, but you would have been probably okay up until maybe this point where we're looking at, oh no, you still would have been okay. So that was only $700 odd worth of drawdown there, and that's coming up against itself as well. So you could have taken another $2,000 off the table as well, or you could have held on, and then at this point here, you could have just taken off, well, even back here, you could have taken $2,000 off the table and said, well, look, I'm going to take that $2,000 off. Or you could have kept adding equity to it and increasing your risk. So this is obviously just trading the very lowest amount, but we could run this again at a higher amount, because our drawdown, we can see here, probably wouldn't have got much further than, if we doubled that, we probably might have hit 400 as an account balance, and would have been scary, don't get me wrong, but it would have come back and you would have doubled your money essentially. Right, so that's this one here that I've just put on the chart, fresh, and this is a slightly different version of the one that I've got running at the moment. So let's move on to that version, and I'm just going to double check. Oh yeah, my stream's still working. Let's get on to those versions. So here are some other ones using the same strategy with slightly different rules. And as I said, I did it a few weeks ago, so I can't exactly remember what those rules were, but I do know how to replicate them if I spend a bit more time. So these ones actually work, or actually I tested them across a longer time frame. So this one here was from 2011 to 2016, December the 9th. So a much longer time frame. And so you can see how robust it is. That said, it does get really close to, Scaryville, where your $1,000 is at risk here. And it got to what, 300, so 366 is the low. So sort of around about the $400 mark here you're getting to, and even getting there when you start to make some headway, but it does take off. And in the course of this period of time, which is 5 years, it really sort of skyrockets your account. So that was that strategy. I didn't really like that one because 5 years, do I want to have that much risk and all that sort of stuff? So I had a look at this one, which was between 2015 and 2016. So this was almost 2 years minus a month. And you can see here that we get down to 489, which is pretty good. So you're only sort of coming 50% into drawdown here. And you can see here it sort of hugs that equity curve quite a lot of the way, and it gets this nice spike here where it jumps up because the price jumped, and it must have been at the end of a day when it closed at the end of the day, or I'm not too sure how I structured this one, but I know that if I do a bit more work, I can replicate it for you guys. So I almost could get a vote on which one people want. So within 2 years, you $1,000 accounts grown to, and this is literally just keeping the same risk. So it has not been changed one bit here. It's always 0.01. It jumps it to almost 10 grand, so 7,500 profit in just under 2 years. So look, I mean, this strategy could have some good legs, and it's yours if you're watching and like this. It's yours if you like the video and then go and put your details in so I can contact you when I've got to 100 likes, and then I will be distributing this EA. Okay, this one here. So this one ran over 2015 to 2016, so same period as this one. But you can see here we missed that big jump, and in actual fact, this one's probably not as good because it gets down to much tighter, down to blowing your account at this point here. So I'd discard this one. And in this one here, we ran this over 2012 to 2016, so a lot longer period. I didn't mind this one because the drawdown only got to 50%, but it was a slow mover, so a lot less trades, and for 4 years, it's double your money on a $1,000 account. It's not really going to pay the mortgage off, is it? So let's get rid of that one. This one here, 2015, 2016, so similar to, I suppose, this one here. Oh no, which one are we talking about now? Yeah, similar to. Well, so I suppose it's different. It's different again. Did get down to almost $200 left in the account before it started creeping back up. So a little bit scary. Have we got better? Yep, we've got better, so we can get rid of that one as well. This one here, more steady in terms of the equity, 381. So got down to a sort of $400, maybe 500, 50% drawdown. Same sort of period of time, so nothing new there. We can get rid of that. And this one here, what's the difference here? I don't think there's any different from this one here. Let's have a look. Oh yeah. Oh no. So we're left. So that one hang on, here we go. This one here was the last one we're going to look at. So this one, what do we have? So we had 4,000 profit, and this was just within 1 year. So this actually looked pretty good. I think very high risk. So I think if you went back further in history, you probably would have blown your account every single year. But taking your 1,000 to 4,000 with 4,000 to 5,000 with 4,000 profit in 1 year is pretty good. But as I said, very high risk. So look, guys, if you want to, and what I might do is show you exactly what you need to do. If you want to get a copy of this, all you need to do is go to, I'm just going to copy that URL, paste it in here, and go to this form, copy the URL of the video you're watching, and paste that in here where it says your answer. So paste the URL so I know which one you're talking about, because I'm planning to do a few of these. And then you're going to put your first name and you're going to put your best email here, hit submit. Then you are also going to like the video. So if you like the video, then you are in with a chance to get it, but I need 100 likes. So the other thing you need to do is share the video and to other people, other traders out there. If they want a free EA, if we can get to 100 likes, the quicker we can get there, the quicker I can distribute these, and you guys are going to get this EA to have a play with. And I'm happy to work with you to enhance it, to try things out and add things in if you want. So, guys, it's up to you. If you want it, like the video and flick it on to your friends, people on forums, whoever you know, get them to like it. Get to 100 likes. So the last person to get to 100 likes, when you see 99 and you're hitting the button to go to 100, please send me an email. Go to automatemytrading.com, find the contact form and just send me a note saying, hey, Cam, look, we are at 100 likes, so please distribute this EA. Okay, and we're calling it the Stacked MA EA. Okay, so it's Stacked MAs. All right, guys, so I'm going to sign off. First YouTube live, I'm going to go and check, make sure it all worked and it went okay. And hope to see you on here. And for those of you that got the email from my list, then hope you enjoyed the video. Okay, guys, I'm going to sign off now and see how I do this. Okay, what do I do? Stop streaming? Yep. Okay, see you later.